You are destroying your portfolio, not because you picked bad coins, not because the market crashed, but because of 3 habits, 3 mistakes everyone makes, and they are costing you thousands, maybe tens of thousands. I am going to show you exactly what you are doing wrong, why it hurts, and how to fix it today. Because March 31st, 2026 is not too late, but you need to stop these 3 behaviors immediately. Let me show you what is killing your returns. Mistake 1, trading too much. You check your portfolio constantly, 5 times per day, 10 times, 20. Every green candle tempts you to sell, take profits. Every red candle panics you, cut losses. So you trade constantly. Bitcoin drops 3%, you sell. It bounces back, you buy higher. XRP rallies 5%, you sell. It continues to 10%, you FOMO back in. Repeat over and over. And you think you are being active, strategic, but you are bleeding money. Here's the math. Bitcoin at $66,599 right now. You bought at $60,000 last month, up 11%. Great. But you traded 5 times this month. Each trade has 0.25% fee on Coinbase Pro. That's 0.5% round trip. 5 trades, 2.5% in fees. Your 11% gain becomes 8.5%. Then taxes, short-term capital gains, up to 37% federal if you're in the top bracket. Your 8.5% becomes 5.4% after tax. You turned 11% into 5.4% by trading. And that assumes you timed trades perfectly. Most people do not. They sell bottoms, buy tops. Actual returns? Negative, despite market going up. A Fidelity study analyzed 20,000 accounts. Traders who made 0 trades outperformed active traders by 4% annually. Why? Fees, taxes, bad timing, emotional decisions. The less you trade, the more you make. That is not theory, that is data. Look at XRP, 133 today, down from 339 all-time high in 2025. If you bought XRP at $2 in February and held, you are down 33%. Painful. But if you traded 5 times trying to time bounces, you are down 45%. Fees and bad entries destroyed you. The holder lost less than the trader, even in a down market. Here's how to fix this. Delete your portfolio apps from phone. Seriously, you do not need to check daily. Set up automated buys, weekly or monthly, whatever you can afford. Then forget. Check once per month, not daily, monthly. If you cannot resist, move coins to cold storage, hardware wallet. Make it hard to trade. Friction saves you from yourself. And set rules. Only trade if price hits predetermined target, not emotion. Plan. If Bitcoin hits 80,000, sell 20%. If it drops to 50,000, buy more. Write it down, follow it. No deviation. Overtrading is the #1 portfolio killer. Not bad picks, not crashes. Your behavior. Fix it. Your returns will double. Mistake 2. Holding too many coins. You own 20 coins, maybe 30. Bitcoin, Ethereum, XRP, XLM, HBAR, Algo, Matic, Link, Uni, AVAX, DOT, Atom, and 10 more. Why? Because you heard about each one, got excited, bought small amounts. Now your portfolio is fractured. $1,000 spread across 20 coins, $50 per coin. And you think you are diversified, protected, but you are diluted, weak. Here's the problem. When Bitcoin rallies 10%, your $50 Bitcoin position gains $5. Great, but your other 19 coins, half go down, half go sideways. Net portfolio gain, 3%. If you had all 1,000 in Bitcoin, you gained $100. But because you own everything, you gained $30. You reduced upside without reducing risk. Because in crypto, when Bitcoin crashes, everything crashes. Diversification does not protect you. It just waters down gains. And management becomes impossible. 20 coins means 20 projects to track, 20 roadmaps, following 20 teams, knowing 20 tokenomics. You cannot do that, so you don't. You just hope, and hope is not strategy. You have no conviction, no plan, just a bag of random coins going nowhere. Look at the data. XLM at 17 cents right now, up from 15 cents last week, 13% gain. If you owned 10,000 XLM, you made $1,300. But if you split portfolio across 20 coins and only had 500 XLM, you made $65. Same market move, 1,000 versus 65. That's dilution cost. And taxes get worse. Every trade you sell triggers taxable event. 20 coins means 20 tax calculations, tracking cost basis for each, calculating gains, reporting. Complexity creates errors. Errors create audits. Audits create penalties. Simple portfolios have simple taxes. Complex portfolios have expensive accountants. Here's how to fix this. Consolidate. Pick 2 to 4 coins max, Bitcoin as foundation, then 1 or 2 alts you actually understand. XRP if you believe in institutional payments, XLM if you believe in stablecoins and remittances, or Solana if you believe in speed and DeFi, but not all of them. Choose. Sell the coins you don't understand, the ones you bought on hype, the ones you forgot you owned. Consolidate into positions large enough to matter. If you have $1,000, do not spread it across 20 coins. Put 500 in Bitcoin, 250 in XRP, 250 in XLM, or 700 in Bitcoin, 300 in XRP. Concentrated, meaningful. When those coins move, your portfolio moves, and you can actually manage 2 to 4 positions. Track them, understand them, have conviction. Diversification in crypto is a trap. Concentration creates wealth. Mistake 3. Ignoring tax optimization. You trade, you take profits, you reinvest, you think you are building wealth, but you ignore taxes, and taxes are destroying you silently. Every trade, every profit, taxable, and if you are not planning for it, you are in trouble. Let me show you how bad this gets. You invested $10,000 in January. Bitcoin was $60,000. By March, Bitcoin hit $70,000. You sold half. $5,000 initial became $5,833. Profit, $833. You feel smart. Then you buy XRP at $130 with that profit. XRP rallies to $160. You sell. Another profit, $300. Total gains, $1,133. You did 2 trades, made 11%. But April comes, tax time. Those gains, short-term capital gains, taxed as ordinary income. Assume 22% bracket, you owe $249 on the Bitcoin gain, $66 on the XRP gain. Total tax bill, $315. You thought you made $1,133. After tax, you made $818. 30% evaporated, and you didn't set money aside, so now you have to sell more crypto to pay taxes, which triggers more taxes. Death spiral. And it gets worse if you're in a higher bracket. 32%, you owe $363. 37%, $419. Half your gains gone, and this assumes you tracked everything. Most people do not. They forget trades, miss cost basis, underreport, then IRS audits, penalties, interest, disaster. Contrast this with long-term strategy. Buy Bitcoin at 60,000 in January, hold for 1 year, sell at 70,000 in January 2027. Same 10,000 profit, but now long-term capital gains, 15% for most people. Tax, $1,500, not $3,700. You saved $2,200 by holding 12 months instead of trading. That's 22% of your profit saved just by waiting. And if you never sell, no taxes. You just hold, accumulate, build position. Taxes are deferred until you actually need the money. That's the strategy wealthy people use. They do not trade for small gains and pay taxes every year. They hold for decades, let assets appreciate, borrow against them if they need cash, and pay zero capital gains. Ever.
Here is how to fix this. First, track everything. Use CoinTracker or Coinly. Every trade, every transfer, every transaction. Automate it so tax time is not nightmare. Second, minimize trades. Every trade creates tax event. Hold for long-term treatment, 1 year minimum. That drops your rate from 37% to 15 or 20%. Massive savings. Third, tax loss harvest. If you have losing positions, sell them in December. Realize losses, offset gains, lower tax bill. Then buy back in January if you still want exposure. 30-day wash sale rule does not apply to crypto yet. Use it. And fourth, consider retirement accounts. Self-directed IRAs can hold crypto, tax-deferred growth, or Roth IRA, tax-free growth. If you are serious about long-term wealth, structure matters. Ignoring taxes is like running a marathon with weights on ankles. You might finish, but you will be last and exhausted. Optimize taxes, keep more of your gains, compound faster. The current market context, why these mistakes matter now. March 31st, 2026, Bitcoin at 66,000, XRP at 133, XLM at 17 cents. Market is in fear. Fear and Greed Index at 23, Bitcoin dominance at 57%, altcoins underperforming. This is exactly when these mistakes hurt most, because fear makes you trade, panic sell bottoms, FOMO buy bounces. Your emotions are heightened, which means your mistakes are amplified. And portfolio bloat is killer in bear markets. If you own 20 coins and 15 go to zero, you lose 75% of portfolio even if 5 succeed. Concentration in strong projects protects you. Bitcoin, XRP, XLM have institutional backing, regulatory clarity, real use cases. They survive bear markets. Your random altcoin from 2021? Dead. Consolidate now before it is too late. And tax season just ended, April 15th. If you got hit with massive tax bill, you know the pain. Do not repeat it. Plan for 2027 taxes now. Track trades, hold long-term, harvest losses, optimize. If this breakdown of the 3 ways you are hurting your portfolio made you realize what you need to stop doing, smash that like button. This is not about picking better coins. This is about behavior. Stop overtrading, stop over-diversifying, stop ignoring taxes. Fix these 3. Your returns will transform. Subscribe for content that improves your process, not just your picks. Drop a comment. Which mistake are you guilty of? Overtrading, too many coins, ignoring taxes? Admitting it is first step to fixing it. And share this with someone whose portfolio is underwater despite market going up, because bad behavior kills returns faster than bad markets, and they need to know what is destroying them. I will see you in the next one.